Hi, I'm Gwen Preston of Resource Maven, and today I want to talk about sentiment and seasonality in gold. So gold ended 2016 up just over 8%. Of course, it declined a lot in the second half of the year, and Trump was the sucker punch. He was the hit that knocked an already declining gold price down several more notches. What happened there is his regime, which we can sort of sum up as lower taxes, less regulation, and US protectionism, ignited a storm of US economic optimism. Whether that will be justified completely remains to be seen. But what matters right now is the sentiment that that plan has engendered. So that sentiment, just to sum it up, is long US equities and bullish on the dollar. And those are both headwinds for gold. What I want to point out though is that trends are only trends as long as they last. Seems like kind of an obvious thing to say, but it still needs to be pointed out because there's much reason to believe that the tide will turn. When is another question. But some of those reasons, okay, so asset valuations are high. Odds are very good that America will see higher budgets, higher trade deficits, and higher inflation before any Trump benefits actually manifest. Political stability is low. All of these things favor gold. That's great, but right in this instant, that rationale matters less than the fact that the Trump sentiment is overwhelming. So, and sentiment is a really powerful thing. When a majority of market participants lock into a particular outlook, they can cause that outlook to actually happen. That's what sentiment is. And once momentum of that sort builds, it does not dissipate easily. That's the scenario that we're in right now. So despite rationale being for gold, we're still in this sentiment against gold scenario. So what's the gold investor to do? Well, I would say that in the very short term, there's a few particular things to pay attention to. We have this fact that the fundamentals do support gold. We have negative real rates, we have political uncertainty, and all of these things. We also, importantly, have the fact that gold is oversold. It lost 13% in the last 2 months of 2016. That alone is a significant enough move to expect a rebound, which we're already starting to see right now. And then we have the fact that the first quarter of the year is reliably the best for gold equities. Okay, equities in particular. Using the venture index as a proxy, in the last 15 years, explorers have produced significantly better returns in the first 3 months of the year than they have over the year as a whole. So of those 15 years, only once did the venture index underperform in the first quarter. 3 times it was in line with what happened in the rest of the year. And the other 11 times, the first quarter was the winner by far, sometimes producing multiples of the year's gain in those first 3 months. So gold is doing well right now, having gained a few percent since Christmas. And a few high quality explorers are leveraging that performance, offering some real, those are the equities that I would say offer some really good odds of producing a new discovery, which is what the market is so keen on right now. I think what we're seeing is a mining sector that is heading into another first quarter run. How long and strong that run will be is very tough to know. It helps that copper and zinc and uranium are also doing well right now, creating a better foundation so that just a little move in the gold price will, I think, create that really reliable first quarter run for metals explorers, which will be great. What I want to point out, regardless of what happens in the big picture, seasonality is a great way to play the mining sector when uncertainty reigns, which is what's happening right now. So I would say get ready right now for a good few months.